What is going on, DeRosa Insiders family? This is Matt Faircloth, and welcome to DeRosa Insiders Live. My name is Matt Faircloth. I'm here from the DeRosa Group, here to talk to you about all things multifamily, all things real estate investing, all things cash flow, all things alternative wealth. Let's get into all the things, right? Why do people invest in real estate, right? People invest in real estate not just because it's cool, not because it's fun. It is cool and it's fun, but people invest in real estate for certain reasons. And if you're raising capital as we do, it's important to know why your investors are investing with you in a deal or in real estate in general. As I said before, they invest for very specific reasons in real estate, be that cash flow, right? It's an investment vehicle that, if structured properly, can pay a monthly, quarterly check portion of revenue that it makes back to its owner as a cash flow revenue stream. That's one reason why people invest, is because they want that cash flow that real estate can produce. Okay. There's another reason why people invest in real estate is to preserve their wealth. Maybe they've been blessed and lucky enough to have a little bit of a nest egg or a big nest egg set aside. Real estate's one of the best places to keep your wealth. Did you guys know that a oversized amount of millionaires, I wish I knew the percentage off the top of my head, but a oversized percentage of millionaires in the United States either made or hold their wealth currently in real estate? That is a huge portion of millionaires in the US that either made it in real estate or are now keeping it in real estate as a place to keep and grow their wealth. So that's another reason why people invest in real estate. But today, guys, we're going to talk about legal ways that you can minimize your tax burden through real estate investing through something called a cost segregation study. So guys, let's bring in our guest, Mr. Sean Graham. Sean, how are you today? Welcome to DeRosa Insiders Live.
Yeah, how are you doing, Matt?
I'm good, man. How are you?
I'm good. Thanks for having me on here. I'm
Good.
super pumped to be here. I was thinking about it, and you have the raising private capital sign in the background. I've got a note on my phone, my iPhone, from 2019 of like details of the entire book that I went through. That's how I kind of started out in real estate, and yeah, it's cool to actually be talking to you in person here.
Well, you're
Or
welcome. And I'm glad the book made an impact for you. And as it has for a lot of people, I had no idea that book was going to do what it did, or that so many people were going to reach for it when they were learning how to get involved in real estate investing. So, but I'm grateful to have you here today. Your company is called Maven Cost Segregation, or Maven Cost Seg, correct?
Maven Cost Seg. Yep,
Maven Cost Seg.
mavencostseg.com.
Okay.
Yep.
So tell us real quick, guys, and then for listeners, we're going to talk about tax advantages, right? And a cost segregation study is one of the best ways to leverage tax savings from real estate investing. So Sean, could you real quick talk our listeners through what it like, why real estate investing is a place that people should look for tax? And we'll unpack cost seg in a second here, but let's start with just tax savings first. Why is real estate a good tax shelter for people to invest?
Yeah, I think if you look at all of the like very wealthy real estate investors, they don't pay anybody any taxes, right? And the reason really is because of depreciation. So the IRS, they incentivize people to invest in real estate, keep improving real estate, keep reinvesting in real estate, and there are tax advantages to that, so that really the taxes are all deferred. So um, we can front load appreciation, we can offset the real estate income, we can offset other passive income as well. And the IRS just loves real estate. So I think it's a great way to build wealth, to build equity, to build cash flow as well, and to keep that cash flow in house and have minimal taxes. So I think there's a reason that the wealthiest people are always investing in real estate, and a lot of that is for
Yeah. One of the reasons why the IRS, I think, loves real estate is that they understand that real estate ownership, it's not like, back in the medieval times of like lords and stuff like that. Well, and all it's really there because the IRS understands that owners of real estate provide opportunities for others, and they provide, be that housing or opportunities for somebody to open up a business. The only way I'm going to make money with my real estate is if I make it marketable, affordable, and something the market would want to use, be that a storefront, an office building, or an apartment building,
Yep.
whatever it is. I think the IRS is forward thinking enough to understand that that's why we get benefits of depreciation, is because real estate is a asset that benefits society. In some ways, it's tough to find other asset classes that benefit society as much as real estate does.
I agree. It's the
Yeah.
foundation of the economy, really.
Yeah.
Like,
Yeah.
businesses where people live, like it's all real estate is heavily factored in to all of that. Obviously,
Yeah.
we have, this big movement towards online businesses as well. But you need to go to any doctor or go to the dentist or, you go to a restaurant, you still, real estate is very, very much the
Yeah.
foundation
And we
of
keep preaching to the
economy.
choir too. Real estate also provides a lot of jobs, either in the building
Exactly.
of it, and also in the maintenance of it, and also in the economic maintenance of it. I mean, I can't, there are accountants and there are firms that help people maintain the economic status of our real estate. There are those that work for the insurance companies that insure our buildings just in case, God forbid, something happens to them or something like that. Real estate in all the different ways is a major contributor to the economy for existing buildings, new builds, and also businesses that occupy them. So I think for all those reasons, that's why the IRS offers, I think, to be very favorable incentives for real estate ownership. So guys, that in essence, Sean, what that means is I own a apartment building and
Right.
I can by right depreciate that building. To talk me through what that like how we structure that, what like, what people can expect through just standard depreciation, and then we'll get into what how cost seg even accelerates that.
Yeah, so when like the IRS looks at real estate as a depreciable asset, so the land is not depreciable, right? So you have let's just say you have a $1 million purchase price, you have let's maybe $200,000 that goes towards the value of the land, you have $800,000. And so IRS says, well, there's wear and tear every single year, even though in reality, a lot of times, most of the time, right, like over a long period of time, the value of your building is actually going up, or you can add value, you can force appreciation. But the IRS says, well, it depreciates over wear and tear. And so they take, if it's residential, meaning like people are living there, it's an apartment complex or it's a single family rental, you depreciate that over 27 and a half years, just straight line, flat depreciation. And 27 and a half years, that's a long time, right? Most people aren't holding buildings even 27 and a half years. They're going to get rid of them before then. So what a cost segregation does is it allows you to front load that depreciation. So we go into a building and we say like, okay, well, this entire thing isn't going to depreciate over 27 and a half years. There's certain aspects of it where we will depreciate some of this over 15 years, some of it over 7 years, some of it over 5 years. And so the goal, right, overall is to front load as much as we can depreciation wise to get those benefits in year one.
That's
Reason being,
because many things in my property, like I said, I wish my refrigerators and all my apartments would all last 27 and a half years, but they
right.
won't. Put a brand new one. Put a brand new one in there, even in my home. It's not going to last me 27 and a half years. And I'll treat it really well. I'm not going to abuse it like my tenants might. I'm going to keep it and everything like that, but it's still not going to last very long, right? It's because it's a fixture. But even
Yep.
going even further, if I buy an apartment building that's got a roof that's reached half of its useful life, that roof may need to be replaced in 10 years, 15 years, right? The wiring in the walls, the HVAC machines, the windows, all those things are all things that have less than 27 and a half years of a useful life. Right. So the cost seg study is there to like, in essence, look at the things in my building and kind of figure out what's going to not live for 27 and a half years. And you had said the shorter lifespans that the IRS allows us to consider for these studies are what now?
5, 7, 15 year life. And then the
Five,
rest would go
7,
into
and
27.
15 year life. So guys, think about
Yeah.
that. When you're looking around an apartment building, or even just like I'll give you guys all our listeners homework, right? Walk around your home, right? Walk around your home and look at each thing and say, is that going to live for 27 and a half years? Or would that live for 5, 7, or 15? Right. And start thinking that way. And if it was an apartment building, the IRS would allow you to put these things on into a different bucket, because they acknowledge, they realize, they're realists as well, that yeah, we can't write everything down over 27 and a half years. So this idea of the fixtures in your property into different lists, that's been going on for a long time. But there's a new feature called as Sean was talking to you about us being able to realize some of those losses now. So Sean, talk to me about it. So now I've got my list. I got all my fridges and maybe my plumbing. Maybe it actually helped me list a few other things that people like. What's like the most uncommon thing that people don't realize should be on that 5, 7, and 15-year list? Like, what are some things people like might think, oh no, that's certainly a 27.5-year life thing, but surprise me. Give me something that should be on the short
Yeah,
list.
for sure. So, let's look at, I guess, starting with the 20, first of all, let's start with land. The land is not depreciable.
Yeah.
So you
Your
have to
building burns
extract
to the
value.
ground, you still got the ground that it was sitting
Just
on. Right.
exactly,
Yeah.
exactly. The earth's not going anywhere. So
Yeah.
land is not depreciable.
Yeah,
Then the next thing
unfortunately.
is you have the building. And so the building, the actual structure, I like to think of it as really like the structural components. So you're talking about like the foundation, the brick walls, the roof, like what actually makes it a building, right? Even like the windows, all those, that is part of the permanent structure of the building. That all still goes to 27 and a half years.
Mhm.
It's the things underneath that that we can go into the 15-year or 7-year or 5-year life class. So working our way down, like when we're talking about exterior, like exterior
Yeah.
improvements, so sidewalks, fencing, maybe you get a new patio,
Sidewalks.
um,
Okay.
yep, landscaping,
Yeah.
driveways, all those things. Those are like exterior land improvements, site improvements. So all of those, they get to go into that 15-year life class.
Hmm.
Yep.
Okay. Okay. What
Seven
about like sheetrock? What about like the walls of my property? Am I allowed to, am I lucky enough to get to put that on a 15-year list? I'm not like quizzing you. I'm actually just curious. Now you got my curiosity sparking. I've always wondered that. Like things like sheetrock and insulation. Does that get to go on a short list or is that on the long list?
That's gonna be on the long list.
Oh
Yep,
well.
that's gonna be 27 and a half years.
I guess it makes
So,
sense.
eh
Makes
yep,
sense.
yep, because it's permanent. It's part of
Yeah, it
the
is.
actual structural structure of the building. So there it
Bet you
gets
my
kind of
kitchen
weird.
cabinets don't have to be on the long list
So
because I'm
those
certainly
are
gonna take
5 years.
those out.
There you go. Those
Yeah.
are 5 years. So
5
7
years.
years more like furniture, like if
Alright.
you bought a short-term rental and it had like furniture in it
Of
and it was
course.
part of it, that's going towards 7 year.
Yes.
5 year, we're talking like kitchen cabinets, kitchen appliances, the kitchen drawers, maybe the laundry, garbage disposal, the electrical, right? The electrical is permanent, but we actually the engineers actually break down the electrical into what is going towards the garbage disposal or towards the maybe the laundry, right? And
Mhm.
we're able to actually extract some of that into the 5-year life class. So we can get very, very granular.
And here's a note to all the listeners, don't you ever put a garbage disposal in a rental property, okay? I know
It's
that the
true.
hard way, Sean, that
It's true.
unfortunately, it's just one of these things, it's a clog waiting to happen, I mean, it's a very convenient device, it's very loud, it's somewhat unsafe as well if you think about what it is and everything like that, but I've had too many garbage disposals end up clogging plumbing lines and that because of just too much stuff getting put down there, so all
Yep.
joking aside. Okay, so I've got these lists now. Then so talk me through because that's like one half of the cost seg study of segregating these costs into these separate
Right.
lists. Then what?
Yep. So there's bonus depreciation too, right? So we're saying, okay, not everything goes into 27 and a half years. Some of it's now we can depreciate over 5 years, right? But the IRS, through the Tax Cuts and Jobs Act, right, which was 2017, end of 2017, they implemented bonus depreciation where for 2018 through 2022, 100% of the components that were less than a 20-year life, so the 5, the 15-year life, we could depreciate all that out in year one. That's slowly like fading away, but it's
Mhm,
still for 2024, it's still 60%.
mhm,
So let's just say, $100,000 we're able to allocate towards 5-year life. Well, out of that 60,000 we can just expense in year one. The other 40,000 we expense over 5 years. And I think even as this starts to fade a little bit, like there's still so much benefit in the cost segregation because you are getting this bonus of allocating everything towards 5, 15-year life so much quicker and so much more. You get so much more of a deduction expense
mhm.
when you are
I
depreciating over
mean,
5 years versus
I can
27
tell
years.
you, Sean, because I was in, we were a part of the ramp up that happened after that Jobs Act of 2017 in our company and all
Yep.
that. And it's kind of sort of threw a little bit of kerosene onto the campfire, so to speak, because all of a sudden you're buying an asset. And I saw other people doing this. We didn't do this, but other people were buying assets really strictly for the cost seg that they were getting, which
Right.
I I don't ever want to buy an asset. I want to buy an asset because it makes me money. I don't ever buy an
Exactly. Yeah.
asset just because I can tell on paper the IRS I lost money. I mean, that's one half of
Yep.
the equation. But you also got to make money at some point, right? And so I think that it's fine. Not that it was a great run that to be able to accelerate, I believe, the 15, the 7, and the 5 year list. Back in the heyday, we were able to push all those up to year 1, which means if you buy an apartment building, you could be lucky enough to depreciate 50% or more of that purchase price on the asset first year. Pretty cool.
It's very cool. It's an
Yeah,
amazing, amazing tool. And there's
it
still a
is.
lot of that benefit left. Yep.
There is. And now you can go 60% now and 40% after. But what I don't want people to lose sight of is to say, oh, well, okay, now it's 40, so the juice isn't as good or whatever. A 40%, being able to accelerate 40% of that list is fine. But what it'll enable, but you guys have to remember, that's the other half of the equation. There's still that 60% that's going to allow you to write, you could take that as 60% and write off the 5 year over the next 5 years. It's not like that tax loss goes away. Yes, it's not all in year 1, but the tax loss is what it is. You can just, instead of accelerating it all as a bonus into the first year, you
Yeah.
can spread it out over the next 5 for the 5 year losses and over the next 7 and whatnot. So it maybe incentivizes long-term real estate holding, because then you're not like, you don't like exhaust all your losses in the first year. Doing a cost segregation engineering study is still imperative, I think, for anyone to do, so that they can, maybe spread the losses out and enjoy those negative K1s for a little bit longer than the first year.
Yep. Yep. No, I totally agree. And then the other thing, right? Like you're raising money, you're raising capital. And so the people who invest with you, right, you can pass those depreciation losses on to your investors. Like it's all in the operating agreement, how you set it up and everything. But that can be a very big benefit. And
Hmm.
if you take it even to another level, right? Like not everybody who's investing with you needs those depreciation losses. Maybe
Hmm.
they're in a tax deferred retirement account and they're not paying taxes on it anyways. So because it's staying in that tax
They're in the
vehicle.
tax bubble. It's like,
Right.
yeah, I've always joked that like buying an apartment building with a major cost seg in an IRA is like putting a tax bubble inside of a tax bubble. You don't need
Exactly. Yeah.
both. You only need one of them, you
Exactly.
know?
Exactly. Exactly.
Yeah.
Yep. So there's a lot of benefit too. I think I agree with you, don't let the tail wag the dog. You need to invest in proper and like good asset classes, good investments as first and foremost. But
Mhm.
this definitely helps from a cash flow perspective. I personally, all right, like I invest in real estate myself. I'm looking for great properties that can cash flow on their own. They're going to build equity on their own, and then the tax deferments, right, through depreciation. This is just a bonus.
Mhm.
It's an add-on, but it's also very real. So it's something that people, if they need, right, if they need to look at it ahead of time, they're interested in this, we can actually do the estimates for them ahead of time.
Mhm.
And so it won't be exact, but we can get them a decent estimate to say, like, okay, well, like we expect this much of a deduction in year 1 for you from depreciation. So that's also helpful to understand when you're underwriting, you're doing your due diligence to know what that would look like.
Yeah, and that's great to know, guys. To consider that Sean's company will do that. If you guys are thinking of buying an apartment building or a strip center or an office complex, whatever it is, that Sean's company will jump in and come and give an estimate, in that. So let me see if I can. George had a great question here. Besides having it done professionally, I understand there's some do-it-yourself online cost seg companies for small investors like myself. Unfortunately, couldn't afford a company. Can you talk about pros and cons?
Yeah.
I mean, this is about like doing it yourself here, Sean. And I get you can. I got a buddy who's very very smart finance guy, and he does all his own cost segs. I mean, it's not for the faint of heart, from what I can tell.
Right.
But talk me through to help my man George out here with some thoughts.
Yeah.
Great
So,
question,
George,
George.
that's a
Thank
great
you.
question. So, we offer two different types of studies. We offer a detailed study, a detailed engineering study, and that means that's very granular. We're going to get every component out of the building and make
Yeah.
sure that we can get as much as possible into that bonus depreciation, front load it, right? We also offer a modeling study. And so, a
Hmm.
modeling study is a much lower price point, right? And so, it's a much more affordable. And we did that because there's kind of a gap in the market where people don't want to pay thousands of dollars for a single family home, right? But they still want the benefits of depreciation. So we have a modeling study, and that's really just a streamlined version of a cost segregation study. It's not as granular. We're looking for like the big ticket items, right? Like the appliances, the kitchen cabinets,
Hmm.
things like that. But we're still the goal of it is to get 80% of the depreciation benefit for maybe 20% of the price of a detailed
Hmm.
cost segregation
All
study.
right.
So yeah, that's our goal there is to help fill that gap.
80/20
So
rule.
happy to
Hey,
help you.
okay.
What's
Yeah.
that?
Yeah.
Yeah,
And then
80/20 rule, exactly.
yeah, 80/20 rule. And bear in mind, guys, what you're going to do is you guys are going to take this engineering study and then you're going to consult with your CPA, which, the CPA is the other part of this equation, which we'll talk about. I know that's something that you and I can talk about as well on the CPA side. So let's talk about that in a second,
Yep,
Sean. But remember, guys, you're going to take this engineering report that's going to be broken down. You're going to give it to your CPA, who's going to then submit this report as part of certain forms for your tax forms and stuff like that. Your CPA is the third leg of this tricycle that you need to have involved here to get a cost seg done properly. And so for those watching, including you, George, consult with your CPA on how cost segs go, whether or not it's recommended, tell them the whole situation. And I think that a CPA would be a great team member to be involved in this.
yep.
And great question, George. Sean, transitioning, your company uses or has a means to tell us a little bit about the CPA and bookkeeping services that your company uses for doing stuff overseas. My company, DeRosa, has several overseas team members. All of
Awesome.
our team members are based in the Philippines, but they do everything from a social media stuff, social media marketing, YouTube content creation, all that stuff. But I've also heard of other firms, including yours, that are leveraging what I think to be well-educated folks, really great culture that are now working. And, the folks that work for my company work US based hours. Even made a joke that the Philippines is pretty much on the Eastern Standard Time now,
It's true,
as a
right?
country. Isn't that crazy? There's restaurants
It's
that
true.
are open at midnight. You can go out and have lunch, at midnight, their time,
It's
noon,
wild.
our time, right?
Yep, yep.
Yeah.
It's a great country, great culture. Like I love working with people from the Philippines. So yeah, so I guess a little background. Like I'm a CPA myself, but I
Mm,
don't do tax work. So I don't have a tax firm. All I do is focus on the cost segregation side. So I think it is very important to implement your tax CPA into this, right? Like what I do is when we do these studies, I offer just a free call with the tax CPA so that we make sure we're on the same page.
great.
Any questions, any back and forth, we can figure that out, and that adds benefit to me. I learn, and the tax CPAs learn as well. Um, we do some overseas headhunting, overseas recruiting, right? And so the when it comes to U.S., I think CPAs and professionals in general, a lot of times, it's that 20% of the work is really where their value is, right? And so, like actual tax prep and tax planning, I think like it's great to have a U.S. tax CPA. Like I highly recommend it. But then on the monthly bookkeeping side, right? We can go hire CPAs from the Philippines, CPAs from the Middle East, CPAs from other countries. In fact, I think they just opened it up in the Philippines where they can get the US CPA credentials because usually when I say CPA, it's credentialed in their home country.
Yeah.
Point being, is there's a lot of people out there in the world who the price point is way much less, but they have experience maybe working for Big Four accounting and they can help you out. So we do some headhunting where we go help people hire people from overseas, help US entrepreneurs, US business owners hire people from overseas. So like for me personally, right? Like I have rental properties, I have self-storage facilities, and I was doing all of the tax work, all of the financial statements, everything myself in the beginning. And now I have it all built out in-house, but my team is made up of over 10 people from India, Philippines, Egypt, and we recruit all over, but we help other US entrepreneurs, other real estate investors go hire people overseas. So we have some options for that.
Is that set up like a consulting firm, or are you guys we've worked with a staffing agency that helped us
Yep.
hire our very, very beloved team members in the Philippines, right?
Yes.
We worked with the staffing agents to help do that. So are you guys offering, is this like a staffing agent service, or is it like beyond that where
Exactly.
it's, a little more white glove, or where are we?
So it's not so much white glove, like it's more of a staffing service. So
Yeah.
it's more of the recruiting. So we're going out, basically think of it as a funnel. So,
Yeah.
there are millions of people throughout the world, and there are people you can go on Upwork, Fiverr, things like that. The talent pool is much more limited there. Most of the people, 95% of the people we hire aren't on those websites. So our goal is to go find you the right person who fits the role at the right like market value price. So we start out top of the funnel. We post job boards everywhere, nation or worldwide. We test English. We've got resumes. We do third
Mm.
party like like software skill testing, so we can test like financial analyst skills or whatever they say they have experience in. We can usually test it, and we narrow it down. And then we interview the people who are narrowed down, and we say, okay, we get down from like maybe 600 applicants on average down to like 3 to 5 applicants. We bring you those 3 to 5, you interview them. No obligation. You don't have to, we require like a small deposit just to make sure you're serious about it, but it's refundable if you don't hire anyone. But the idea is to bring you the top candidates. You interview those candidates and you say, yeah, like, okay, I want to hire this person. This is the right fit. Then we have some guarantees in terms of quality for retention and for just quality as well, making sure they truly are the right fit. And you can either hire them directly, right? We just take a fee for doing that, or we do like month to month. And so we're here to make sure like you have the right person,
Hmm.
just like a US recruiter would go help a business here, hire here in the US. We're doing the same thing. We're just doing it overseas. So fill a lot of accounting roles, a lot of in-house accounting roles, because that's a big one that people don't really think about. So yeah, happy to help anyone
Yeah,
who
yeah,
might need those
guys,
services.
it's been something that was a game changer for DeRosa. So, guys, go to mavensuccess.com/Matt. There is a link here in the show notes here. We'll make sure that it makes it over to the long form YouTube video that gets published to this interview as well.
Yep.
Mavensuccess.com/Matt, and so that our friend Sean here knows where the lead came from, so you guys can make sure that it came, so that he knows that it came from in his conversation with your good buddy Matt here on the show.
Yeah.
Guys, that really interesting. It's not, and I want to just underscore one more thing. It's not that we don't want to hire US based folks. Sean and I would both say that. I love my US based team. We have both, but sometimes for a application, it makes sense to hire someone from overseas, whether you just requires a different like mindset, skill set, whatever it is, or if you're a small business where every dollar matters and stuff like that. There is a, call it like a currency arbitrage that you win from when you're hiring overseas and everything like that. So these folks are paid great wages for their home country, and it's a win-win. And we really love US based focus and overseas focus too for hiring. And most companies are becoming multinational and global these days anyway. So
Yeah. Yeah, I think it's big for like especially entrepreneurs who are starting out, and even for myself, like I have self-storage facilities where it doesn't make sense to hire a third-party management company. It would just kill the cash flow on the deal,
mhm.
right? And like I can't manage it myself, otherwise I wouldn't be able to continue to grow, right? Or that would be my full-time focus. And that's something where it's like, okay, overseas person would make sense in this specific role for property management here, right? And so it's less of replacing everyone or just hiring overseas and more of leverage, that 80/20 leverage, right? Making sure you're maximizing the value of the people that you are hiring here in the US and having a lot of the smaller things done or other certain tasks that can be delegated to people overseas. And that's what we do. So yeah, I'll give, I just go to the mavensuccess.com/Matt and then have a discount there for everybody
Yeah,
for just your show listeners. And
sweet. That's great. Hey
yeah,
guys, I didn't even know that Sean was gonna do that. discount associated with you guys for listening today. So to get that discount, go to mavensuccess.com/Matt, and you guys can monetize that and, maybe get some help in running your business, because we're really also, we're only supposed to, as entrepreneurs. The way I grew was by doing only what I was great at. And that means I got to find people that are great at doing stuff that I'm not great at. And staffing agencies like Sean's are where to go to get a lot of that done. So, Sean, final thoughts, anything else you want to bring home for cost seg, for CPA, bookkeeping conversations we talked about today, real estate market, anything you want to throw in there for final thoughts?
Yeah, I did the same thing for mavencostseg.com/Matt. All the listeners just get a discount there too. So go there if you're interested in cost seg. Estimates are free. Keep in mind, like, if you bought in the past, we can go back and look. Like, so if you bought a rental property 5 years ago, you didn't take that depreciation or that accelerated depreciation, we're able to help you out. And you can actually, there's a form where you can actually have catch up depreciation. So rather than
Mm,
going back and refiling 5 years, we can say, okay, here was the missed depreciation. Let's get it all on your current tax year. And
yeah.
that's called a Form 3115. So there's a lot of opportunity there. Happy to help you out. Happy to talk, see if, like, a detailed study would be more beneficial, or a modeling study.
And to throw one
But
thing out there, guys, I've heard large cost seg outfits tell us that, oh, well, unless you spend more than $500,000 for the asset, cost seg's not going to make sense because of the cost of the study. Now,
yep,
you could use Sean's service for the more macro view, not like the super granular study. My guess is, Sean, that the study that you said that costs about 20% of what a full blown cost seg would run you might be worth doing for somebody who's got a two, three, $400,000 triplex or something like that, that they plan on holding for the foreseeable future. Guys, why not unlock a lot of those depreciation losses that you have sitting there for smaller assets? Correct, Sean, correct me if I'm wrong, but I think that could be a good play for a lot of our listeners here.
yeah, no, exactly. That's the whole purpose of it. It's kind of that gap in the market where people aren't doing them, and we want to help you out and do those. So yeah, that'd be really good,
Yeah.
and happy to talk to you if you guys ever want to talk about short-term rental loophole, or real estate professional status, anything like that. Just
Oh,
book a
that's
call with
a whole
me,
nother
and
show, guys. We have
yeah,
to
yeah,
talk about
happy
rep
to talk to
status
you guys
too.
about it.
Guys, go to mavencostseg.com/Matt to hear more on all things. Sean, great having you here on DeRosa Insiders Live. Really appreciate the conversation. Guys, like I said before, it's not how much money you make, it's how much you get to keep. Bookkeeping services and CPA services are going to allow you to properly run your numbers so that you know what you're making and what you want to tell the IRS you made in a clear, concise, transparent fashion, so you can pay not a nickel more than what you owe. And also, cost seg services are there for you guys to leverage the rules that are already there. We're not making these rules up. They already exist, and they're there for you as a real estate investor to take advantage of. Sean, thank you so much for joining us on the show today.
Thank you, Matt. Thanks for having me. I appreciate it.
Thanks. Great episode today for DeRosa Insiders Live. Hope you guys join us next Tuesday at noon Eastern, where we will be here. Be sure you go to DeRosa Insiders on Facebook and join our very, very free community we have there. And if you guys want to pay just a few bucks per month to learn from DeRosa, including attending my office hours, we've got some surprise guests that are coming to our accelerator program. We're bringing in some folks, some other vendors, some folks to come meet with our thriving students that are out there buying apartment buildings, doing deals right now. That's what's happening in our accelerator community. You want to be one of those folks that are out there doing deals with DeRosa's oversight and mentorship. Go to derosagroup.com/accelerator. We want more folks that are looking to grow their multifamily businesses as a part of our community. And it's priced at just a couple $100 per month. If you want to be the lowest price tier is there. And you guys get direct access to me and the DeRosa team. derosagroup.com/accelerator. What are you waiting for? See you guys there. All right, guys. I'll see you next week on Insiders Live. Appreciate your time today. Have a great day.